Imagine investing in Tesla before it became Tesla. What if the next electric vehicle revolution isn't happening in California, but in Shanghai? And what if I told you its stock just tanked? Sounds risky? That's exactly why it might be your golden opportunity. This is the story of NIO, China's once rising EV titan, now facing its biggest storm yet. And today, you'll learn how to turn that storm into strategy. Buckle up, because while others panic, you're about to position yourself like a financial sniper. Let's dive deep. NIO was hailed as the Tesla of China. Founded in 2014, backed by giants like Tencent, and riding China's EV wave. They weren't just building cars, they were building culture. Sleek, futuristic, battery swap tech, and even private club lounges for owners. But here's where the story takes a sharp turn. Between slowing domestic demand, fierce competition from BYD and Tesla, and the drag of China's economic policies, NIO's stock dropped nearly 80% from its all-time high. Oh, and did we mention the US-China delisting fears? At this point, even NIO's investors needed a battery swap for their patience. But here's the kicker. While most people see a company in crisis, smart money sees a mispriced asset. And that's where you come in. Let's not sugarcoat it. NIO is bleeding. They missed delivery targets. Margins are thin. And the brand hype is fading in China's cooling EV market. But here's what the headlines won't tell you. Despite the pain, NIO is doing what most startups can't: survive. They have over 2,000 swap stations, strong engineering talent, and state support in China. And they're not just staying afloat, they're expanding into Europe, targeting high-end EV buyers in Norway, Germany, and the Netherlands. Why would a company on the brink of collapse expand into luxury markets? Maybe because they know something the media doesn't. If you're thinking short-term, NIO looks like a wreck, but long-term investors, hedge funds, sovereign funds, they're buying the dip. Price to sales ratio, dirt cheap. Government EV stimulus, ongoing. Battery tech edge, still competitive. And here's where your insight becomes power. You don't just throw darts. You zoom out, identify strategic price zones, and time your entries like a chess master, not a gambler. Now you know the story. You've seen the flaws and the firepower. So the real question is, how do you play this? Tactical options 1. Dollar cost averaging. Spread your investment over time. NIO is volatile. Treat it like taming a dragon. 2. Options. Strategy. Use long-dated calls, leaps, to minimize risk while betting on the turnaround. 3rd. Pair trade hedge against Tesla or BYD to neutralize sector risk. Or you could just go full YOLO and buy NIO calls. But let's not make your portfolio cry. What could change everything? NIO's story could change overnight. A sudden Chinese stimulus, a breakthrough in battery tech, a US market re-entry. This isn't about betting on perfection. It's about identifying asymmetrical risk, where the upside outweighs the downside. That's how real wealth is made. You're now ahead of 95% of retail investors who see NIO's chart and scroll past in fear. You've taken the time to understand the chaos and decode the potential. But NIO is just one piece of the bigger game. If you really want to master this market, you need to know how to spot these turning points before they hit the news. So what if I told you there's a strategy to predict market trends without being glued to charts or CNBC? Watch this next. Stock market trend mastery, made easy, linked right here on your screen.